Doing your radio once again from DRFX, Swing Trading Mentoring. Going to be taking a look at the strong downtrend that the pound Canadian dollar has been in for quite some time, which could provide us with a trading opportunity once the market begins to resume the current downtrend or the main downtrend, following the temporary bullish movement that has been taking place over the last couple of days. Now you can see the strong downtrend that this currency pair has been in since the early part of this year. And so, given the fact that this is in a strong downtrend, the priority in terms of trading opportunities is going to be in terms of bearish movements that are in sync with this current trend direction. Now, taking a closer look, you can see that even though the market is somewhat now above the downtrend line, the break above this downtrend line so far is not that significant. And so, as you know from the theory of trend lines and trend direction, even if the market has broken above or below a trend line, it still is possible that the market can resume the trend so long as that trend direction is going to continue. So, in other words, a break above a trend line, a downtrend line, is not enough of a condition to start trading against the main trend direction, because it is always possible that the market can resume the trend direction so long as it is not significantly above the downtrend line. So yes, this is above the trend line, and technically speaking, there are traders or there are theories that state that as soon as the market breaks a trend line, then you could start trading in the opposite direction. What you'll find, however, is that that is not sufficient of a condition to justify trading against the trend, because the market can simply temporarily break these trend lines, and then when it is ready to start to resume the trend, it can easily take away and take out these temporary pullback candles, as it provides us with a strong signal to indicate the resumption of the trend. Now, in terms of what could take place to confirm the continuation of this downtrend, here we can see that the market has formed this counter trend line setup, which is what we draw when the market has pulled back temporarily against the main trend direction. So the expectation is that the market is going to be breaking this counter trend line and break below the downtrend line once again to confirm the continuation of the downtrend. So breaks of these counter trend lines act as confirmation of the continuation of the existing trend direction, right? So it is always risky to try and trade the continuation of these trends before the market has broken below these trend lines, these counter trend lines. So whether we're talking about an uptrend, we would break these bullish, or downtrend where they'll be broken bearish, the best thing to do is to wait until the market provides us with confirmation in terms of a strong break candle that clearly breaks these counter trend lines. So that will be confirmation. Of course, once again, there's a different school of thought in terms of how to trade trends. So what some people would do is that in the case of a downtrend, they would not wait until the market U-turn, but instead they would wait until the market hits a Fibonacci level or a past or resistance area, or even the trend line itself, and then start to trade the market in the direction of the trend. But again, because of the possibility of the market temporarily breaking these trend lines and then U-turning to resume the trend, trying to trade the market as soon as it hits these trend lines or any resistance area or even a Fibonacci level is going to pose some risk in terms of that option. So if you had decided to enter the market at this area, for example, as soon as the market hit the trend line, then chances are you would have been, depending on where you would have placed your stop loss, you would have been either stopped out already, or you would be holding a floating loss if the market had not yet triggered your stop loss. So that would have led to anxious moments as the market rallied and broke this trend line in violation of that theory that states that you can actually enter the market as soon as it reaches this area. But once again, the market can pull back temporarily and break trend lines before resuming the original trend direction. So that is why it is better to wait until the market breaks these trend lines, these counter trend lines, and provide us with a strong signal to indicate the resumption of the existing trend direction. And one of the possibilities that we could see is for the market to provide us with a strong ABC signal, or perhaps even a double top signal to indicate the continuation of the movement bearish. So these two signals, and perhaps maybe an evening star or bearish engulfing candlestick formation, will be the types of signals that we will be looking out for to break the counter trend line and confirm the continuation of the overall downtrend. So that's the situation that I'm seeing on the pound Canadian dollar right now. Strong downtrend on its daily chart that has been in place for most of this year. And assuming that it's going to be continuing the current trend direction, we're going to be looking out for a break of the counter trend line setup that has been formed on the daily chart, which could come in the form of double tops, bearish engulfing candlestick formations, ABC signals, as well as evening stars. Once again, it is very risky to start to trade the market bullish because the market can temporarily break trend lines before resuming the existing trend direction. And it is also risky to try and enter the market to trade the existing trend direction simply because it has hit the trend line, a resistance boundary, a resistance point, or Fibonacci level. Because the market can temporarily pull back and break these trend lines and break through these levels before actually U-turning to continue the existing trend direction. So going to be waiting for the market to provide us with that signal on the daily chart. And if it is strong enough and clear enough, then we will be looking forward to taking advantage of it as the market resumes the downtrend. So of course, if you have any questions, you can let me know by emailing me at shepherdduane@gmail.com. Of course, you can check out my website, swingtradingmentoring.com, and Instagram at drfxtradingboss, where you'll find a full description of the trading methodology that I now use. You can also check out my thread at BabyPips using the same username as my Facebook page, DRFX Trading. Twitter, you can also find me using this username at Worldwide876. And on BabyPips, you will also find a description of the trading results that have been provided by my methodology, as well as videos that have described these trading results as well as other trading theories. Of course, you can also check out my trading history and profile at Dukascopy Bank, where I participated in many trading competitions, article contests, trading contests, as well as fundamental analysis contests, as well as participated in a few webinars as well. So until next time, traders, happy trading and all the best.